What up? What up? Just queuing everything up right now. You guys know how it goes. We will be there in 2 seconds.
Along with tariffs, maybe targeted tariffs, what's different about what the president is doing right now?
So look, I think tariffs are a very important part, a tool in our economic toolbox.
Oh boy.
But they have to be used in a way that is targeted. We have a specific goal. We are bringing it in with a timing that makes sense, so that we're going to be able to manufacture things at home. Take, for example, the pharmaceutical industry. Right now, you've got a 9 out of 10 chance that when you have a prescription filled, that it was made somewhere overseas, probably Asia, and the materials for it came from China. That puts us in a vulnerable position. So using tariffs as part of an integrated strategy to get more pharmaceuticals manufactured here in the United States makes sense economically, makes sense strategically, but that is not what Donald Trump is doing. By putting across-the-board tariffs with virtually every nation on virtually every product with no planning and no rhyme or reason to the numbers is just creating economic chaos. And when there's economic chaos, no one wants to make investments in the United States to build more manufacturing, to build more good jobs here in America.
Are you hearing from businesses at this point? What are their constituents? I mean, it's an unusual place to find businesses maybe running from Republicans and running to some more progressive Democrats seeking cover.
You know, we're hearing from businesses, small businesses, big businesses. We're hearing from families. Already, businesses are starting to raise prices in anticipation of how to weather this storm, which means costs are going up for families. Small businesses are worried that they're just going to get capsized in this kind of turmoil. And that's the problem that Donald Trump is creating. Nobody can plan for this. The numbers make no sense. And this is the moment for Congress to step up and exercise its power. The authority that Donald Trump is using is a declaration of emergency, but the specific law for that says that Congress can pass a resolution and say, no emergency here. And let's face it, realistically, emergency, really? Yeah. It was designed for things like we go to war. And instead, Donald Trump is declaring an emergency with Belgium, an emergency with every country around the world. So it's time for Congress to step up. Every Democrat is ready. We just need the Republicans to join us and say that they are ready to go as well. You know, this is a real point for the Republicans. Do they think that their job in Congress is just to bend a knee to Donald Trump, no matter what he does? Or do they think their job in Congress is actually to represent the American people and to help protect them and their livelihoods and this economy?
Well, that's about enough of that. Good morning, everyone. Just wanted to see what was going on with CNBC. It is kind of interesting. It will be very interesting to see if Republicans go against Republicans are going to go against Trump on these tariffs. There already have been some Republicans coming out. So if all Democrats do vote to get rid of tariffs, and there's also Republicans siding with that as well, it is interesting. You could see some issues there. I know Ted Cruz has been pretty public against tariffs. Then you have someone like Donald Trump, obviously. And a lot of other Republicans very pro-tariffs, but it doesn't seem like the Republicans have a ton of unity on the tariffs themselves. So it's going to be really interesting to sort of see how that all gets navigated. I think if there was a proposition to end tariffs brought by the by the Democrats, you would see some Republicans voting for it. I don't agree with that. Once again, I'm still under the belief that tariffs are a good thing for the United States, but at that same point, a lot of these people, especially the politicians, are just going based off of what's getting them votes, and the current market environment is not going to be getting them a lot of votes. So I watched some of it. I watched some of it, Roger. I watched like all like the most popular clips from it, but if there's anything in particular I should be paying attention to, please let me know. It's interesting though, because it could get, there could be a shakeup here. See what we got going on the news front. We'll go back to CNBC when Elizabeth Warren's done whining. Trueflation numbers are coming in really low. The Federal Reserve really needs to cut. We're getting to the point where we now have
publicly. Yep, they're worried.
Whoops, forgot to mute up our friend Elizabeth Warren over there. So inflation's now coming in at 1.34. A lot of people are saying the Federal Reserve can't cut rates because we have an inflation problem. Not here. Negative 1.34% on inflation, below the Federal Reserve's target. It's hard for me to imagine the Federal Reserve doesn't have ample leeway to cut inflation with this data. It's really hard for me, or cut interest rates with this inflation data. It seems like to me they have what they need at this point. The market's reacting as if we do need rate cuts, but it depends how much Powell dislikes Trump too. There's politics at play here. So if Powell wants to make Trump look bad, Trump has gone after Powell before in the past, he can leave rates high. Jamie Dimon just said inflation will be sticky. I don't know where they get this from. We're looking at a chart right now of inflation at 1.34%. Everyone's saying that inflation will be sticky, but like where is this sticky inflation? We'll take a look at a better kind of inflation chart here, longer term. I think it's so funny, and it shows you how wrong a lot of people are reading this thing. This is like my favorite chart, and I just keep pulling it up, because at the end of the day, it's like my biggest question with how these people are reading the market. Like everyone keeps saying inflation is sticky, right? Inflation is sticky. Inflation's not going away. We're stuck in inflation. Guys, just look at this data. And let me just clean up this chart a little bit so it's easier to look at. All right, now we're good here. Take a look at this data. This is the inflation data. And we've really got to zoom out and make it tight. I mean, this was the inflation spike. And now we're trading within the range we're supposed to be. So what's sticky? I don't understand what's so sticky about this data. Inflation is already showing us at 1.34%, which means that the next move on this inflation data is likely going to be a pretty substantial move down here. I don't see what's sticky about this. We've had a crash, like a vertical crash down in inflation. Sticky would be if inflation was still hanging up at these high levels, or inflation was kind of came back to the 6% and we couldn't get it lower and we're just slowly moving down. That's sticky, not a vertical crash down. I just don't know what these people are looking like when they start talking about sticky inflation. A lot of people are saying inflation because of the tariffs, inflation because of the tariffs. Look, I understand, but like where in the data is that happening? Because if we look at real-time data by Truflation, and this is being reported with the tariffs live, I mean, inflation is still coming down. It's still going downwards. We're still getting more and more disinflation. It's just a steady line down. And this goes back to when Trump took office and first started putting tariffs on. It's just been lower and lower. So we can talk about how tariffs will drive inflation, but it didn't do it in Trump's first term, and it's not doing it now. It's only one part of a very complicated equation. Bring back Harrison Gensler. Oil down to 56. Oh yeah, I did want to take a look at an oil chart. Ha. That's insanity. Wow. I mean, this is direct fruit. I mean, this is huge disinflation. Oil is falling off a cliff. Wow. I mean, this is the definition of anti-inflation, right? Like oil is just getting eviscerated. Here, we'll take a look at a couple different commodities. Here's eggs. Eggs pretty much back down to normal-esque levels after a huge crash there. See gasoline. Gasoline falling off a cliff. Really pushing down to new lows. Heating oil, new lows. Soybeans, I mean, low. Copper, lows. Steel, low. Lumber, low. Like all these different things are crashing, right? The prices of all these different things are crashing. This is what things are made up of. So it doesn't take a lot to go look through this stuff and say, okay, well, maybe inflation isn't as sticky as some people said. No one ever said it'd be easy. Absolutely. Legendary makes the most beautiful point here. Tariffs do not drive inflation at all. The only thing that makes certain things cost more. Tariffs do not drive inflation at all. They only make certain things cost more. Inflation makes everything cost more by increasing the money supply. Tariffs do not affect the money supply. Well, that's mostly right. I mean, really, inflation is driven by supply and demand. If there's too much demand and not enough supply, that's what drives inflation. The idea behind tariffs could cause a short-term bump in inflation, because if everything just costs 10% more, then everything costs 10% more. But once it's implemented, it's kind of over. The only way you keep getting inflation from tariffs if you're in some kind of trade war, which I think that's what the world's kind of worried about. Seeing oil drop off a cliff, though, I mean, in my eyes, it's a very good sign that we are seeing inflation sort of go away. Having oil at 56, I mean, that's exactly how you get rid of inflation. And let me tell you, the Federal Reserve is going to be watching that extremely closely. See what else we got. Smash the like button and subscribe button. Thank you, Galicio. Really appreciate that. Here's the thing. Inflation, I mean, tariffs cause a one-time bump in prices, but it's hard to say whether or not you even see that bump. Let me give you guys an example. Right now in the United States, just for a really easy example, let's say we're producing a Mickle hat, right? And there's I use a distributor in the United States and I use a distributor in China. The in the United States, it costs $5 to make the hat. In China, it costs $4 to make the hat. Let's say that inflation, or let's say that tariffs caused the $4 hat, if it was passed directly on the consumer, to be the same price as the American hat, which is both $5 hats. Well, maybe the Chinese corporation says, hey, well, we want to keep the cheaper hat. We'll just eat the cost and we'll keep selling the hat at the same price, so we undercut the United States hat. So that's a very simple example of how you can have tariffs that don't actually get passed on to the consumer. Oh, Melissa, thank you. Really appreciate that. I don't know why everyone is worried. Prices will come back up. You may lose your... Yeah, no, people just worry in dips, and it's normal to worry in kind of these dips. It's a fearful time, but the more you can realize that a lot of this stuff is just a macro fit rather than having to do with the underlying assets. I mean, value is almost always restored in a very quick manner because people soon realize that, like, hey, tariffs, if anything, make the importance of a neutral reserve currency like XRP even more important. Mr. Wonderful clip. Thank you for that, Roger.
4% tariffs in China are not enough. I'm advocating 400%. I do business in China. They don't play by the rules. They've been in the WTO for decades. They have never abided by any of the rules they agreed to when they came in for decades. They cheat, they steal IP. I can't litigate in their courts. They take product, technology, they steal it, they manufacture it, and sell it back here. Never has an administration...
400% tariffs? What would that look like?
I want Xi on an airplane to Washington to level the playing field. This is not about tariffs anymore. Nobody has taken on China yet, not the Europeans, no administration for decades. As someone who actually does business there, I've had enough. I speak for millions of Americans who have IP that have been stolen by the Chinese. I have nothing against the Chinese people. They brought great literacy, art, and tech to the world. The government cheats and steals, and finally, an administration, you may not like Trump, you may not like his style or his rhetoric, finally, an administration that puts up and says enough. 400% tariffs tomorrow morning. He'll tell you why. Xi can only stay the supreme leader if people are employed. If we wipe out any business there, because we are still 39% of all consumables on Earth and 25% of the world's GDP, America is the #1 economy on Earth with all the cards. We will not have that forever. It's time to squeeze Chinese heads into the wall now.
Well, hold on a second, Kevin. Well, I hear you, but hold on. If we're talking about people, the average consumer, not necessarily the head honchos of businesses all across the globe, can they withstand the pressure of that sort of tax on the goods?
It's short-lived. There will be
but what's your timeline compared to, you don't know the average American's timeline, what they can actually survive. There's people right now who can't survive
400% tomorrow morning, cheese on an airplane to Washington to cut a deal.
Very interesting. It just shows there's a lot of different perspectives out there. A lot of different perspectives out there. It doesn't really make a difference to me because I agree with Kevin O'Leary there. It's it's all about just forcing in a negotiation because these are all about higher level stuff. Let's see what CNBC's got on now.
To businesses, I don't know what you're seeing.
We're seeing things slow down. I think there's no doubt that things are slowing down because of uncertainty. Having said that, at the moment, everyone who wants a job has a job. We are making massive investments in this country, and some days I wake up and worry how we're going to staff those investments with no immigration. And some days I worry about the kinds of things that Larry Fink is worrying about, which is we'll end up with a recession, which results in significant job loss. I think right now we've had a week of this. Financial markets have corrected. Those people who are tied to asset prices, who thought we were had a God-given right that everything move up at 11% annually, are disappointed. Okay, let's actually deal with that. Markets got ahead of themselves. There's been a correction. It's not the strategy I would have employed. It's a riskier strategy than I personally would have employed. I think it has risks short-term, uncertainty, longer-term brand. But the goal of what the administration wants to do is not a bad goal.
In terms of those risks, though, since you are somebody who's trying to think about how this all plays out, where do you think the Fed ultimately sits in all of this? Meaning, is there a Fed put on whatever President Trump is doing if the markets continue to fall and falter? What ultimately happens here?
Said differently, I much prefer my job to Powell's job today. This is just a hard one because on the one hand, the policies that on tariff, to the extent they are not rectified quickly, have a tendency to be inflationary.
Right.
On the other hand, I don't know how that squares with the Larry Fink view of the world that we're going to have a recession, which tends not to be inflationary and would otherwise spur the Fed to do something other than deal with inflation. So I think it's a
great point right there. I've got to cut in. Everyone is talking about tariffs are inflationary, but he just makes the point, well, if we go into a recession is deflationary. So you have inflationary tariffs and a deflationary recession. And both of these things acting together, like it's what makes this so much more complex and saying this policy leads to inflation. Actually, in my opinion, the fact that everyone on mainstream media is talking about how these tariffs are going to be inflationary makes me think that they're just not going to end up showing inflation. Because the mainstream media, all of those people are always wrong. They always completely miss it. And there's no magic equation to say, okay, this equals this. The economy is so much more complex than that. You can't simplify it to this policy equals this. Am I watching all the illegal banking systems taken down? I'm not sure if I quite understand what you're talking about there. I mean, everyone in the comments has the right mentality because at the end of the day, this doesn't have to do with cryptocurrency. It doesn't have to do with assets. It's just a big macro fit. Let's take a look at what they're saying here.
Frankly, a company thinking about, should I be moving my manufacturing back to the U.S., you might just say, I'm just going to let this play out and watch and wait because there's not a huge advantage to doing something immediately.
You are 100% right. But remember what we're doing. We're building infrastructure, which is already under construction. We're building semiconductor plants already under construction. We're realizing the benefits of the Inflation Reduction Act, whether we liked it or not, of $1.3 trillion of investment. We've been the largest recipients of foreign direct investment the last 3 years in a row, and we will be again this year. We're ramping defense. We're building energy. We're deregulating. All of that is already in the works, plus the pledges from TSMC and Eli Lilly and Stargate and a number of other things. So you are right. Uncertainty is an absolute negative for the economy. It's going to keep consumers. It's going to keep businesses. It's going to keep foreigners from making decisions. If it goes on for a long time, it will hurt a lot. If it goes on for a short period of time, it will not hurt a lot. We can't predict that. I have a base case, and my base case tells me that I expect the administration to resolve the financially oriented tariff deals over the near term, call it a quarter. And if we see progress of that, I think people will relax. I do not expect to see the non-tariff things negotiated quickly.
How do you think this impacts debate about the budget, taxes, and everything else in the U.S. and when that happens? You know, Mike Johnson was talking about that all happening in the month of May. In fact, he thought this would get the whole thing done by May. I imagine that gets pushed out now. And therefore, what does that do to the rest of the questions about uncertainty and the like as this year plays out?
This goes back to everything everywhere all at once. Would it have been better to have bedded down the budget, bedded down Mexico, bedded down Canada, maybe tariff China, and then go after one by one? Absolutely. In my view, that's not what the administration has chosen to do. I think it makes a budget deal harder to the extent Republicans are taking tough.
All right, well, I like this guy, but he's a little boring. So times okay, so maybe a little CNBC left. They might take this to the rest of the rest of the hour. I always think it's funny when they do the interviews outside, because like you hear the wind blowing and like all this stuff in the background. It's like, do the interview inside. I don't care about your little outdoor interview. Their hair's always like blowing around. Everyone looks uncomfortable. Here's Scott Bessent. Let's see what Scott Bessent has to say. I like Scott Bessent a lot. I think this guy's sharp.
I think it's unfortunate that the Chinese actually don't want to come and negotiate, because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world, and I can tell you that this escalation is a loser for them. That they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what? I think it's unfortunate that the Chinese actually don't.
Very interesting. Very interesting. So the Trump administration clearly thinks that they have all the power here. They're going to be able to drive all of these different countries to essentially do what they need. Don't be stupid and sell your assets. Yeah, it's only a loss if you sell. And this is where a lot of people really get shaken up and shaken out. So yeah, don't fall for the trap. Chat, we cooked. Love that XRP alerts. And huge shout out to everyone here. I mean, I know this market isn't a fun one to go through, but I think everyone has a really good kind of mentality on sort of what's happening. This is one of the hardest parts, right? It's easy when the market's going up. These are the times where honestly, I get more excited to do live streams and stuff, because I feel like these are the moments where kind of that define you, right? These are the moments you got to stick strong, focus on accumulation, understand the thesis, and understand that things like what we're going through right now is not a thesis validation problem for XRP. It's more of just, hey, we got to deal with this because the rest of the world is throwing a fit and it's going to impact everyone. Take a look at Amazon in 2008, Apple in 2008, all these big internet companies when we had the 08 crash. The banking crisis really didn't have much to do with Amazon and Apple. I mean, they were just making great products, but they still got wrecked just like everyone else. But what happened on the other side of that? Well, the market realized that these companies were very resilient because their technologies were so good. So I think we'll see a very similar thing here. And it's just funny that you have all these very smart people going all over CNBC and just talking about things that don't make a whole lot of sense. They're talking about sticky inflation. Meanwhile, oil's at $50. They're talking about sticky inflation while inflation data is reading 1%. So, it just begs the question, what are they really watching? Like, what are they really so scared of? And is this a little bit more of an emotional response than anything that's being showing up in data? I'm scared of these dumb politicians. Yeah, I would be scared of the politicians as well. That's the one thing that there's a lot of human element in. I agree. I did say Adkins should be voted on today, right? Yeah, Adkins should be voted in today. I did see that come across my screen. Let's take a look at the CEO of Hidden Road, Ripple's new acquisition. I haven't watched this yet, so this will be a fun one for us to watch together. Let's see what he has to say.
When fragmentation is a theme in a market, PBs tend to do well, as do the trading firms, as they thrive off fragmentation and global pricing. And so we launched the business, the digital side, a few years ago in response to the client's request, and we now clear a material percentage of the global crypto market. I'd like to highlight why it's hazy in this space, and it's not in traditional markets. The first reason is because the initial infrastructure was built in crypto was built for retail investors. So the structure was vertical in nature, meaning clients would open an account at the crypto exchanges who ran the marketplace, they custodied assets of the users, and in certain instances ran internal market makers. That obviously didn't work out too well, a la FTX. But the initial structure kind of confused and blurred the lines of what exchanges were doing as they were filling multiple roles in the ecosystem. The second reason for confusion is the role of a prime broker, comes from how certain firms are marketing themselves. Okay, there's a big difference between a broker and a prime broker. The fact that, in fact, brokers should actually be using prime brokers, but mixed marketing messages create this confusion. The amount of times, Ian, I hear people saying they're a prime broker when they're a custodian or they're a normal trading broker is mind-boggling. And finally, kind of relates to the first point that many of the crypto native folks didn't come from TradFi backgrounds, and they're just not familiar with that market structure. And in many cases, the TradFi world was forced to build over the last 30, 40 years. And so, in short, that's more of a horizontal ecosystem, unlike crypto, which was vertical. And so the crypto native community, again, extremely talented. And as the market is maturing, and unfortunately, they've been through several blowups, they're learning a bit the hard way that you need to separate these duties and responsibilities. And by doing so, it leads to better infrastructure. The second part of your question, and I'll be more brief here, what is the role of a prime broker? It's actually quite simple. Prime brokers are commonly referred to as third-party credit providers, are there to inject capital into the market to allow clients to trade across a whole ecosystem in a safe, capital, and cost-efficient way. Specifically for crypto, we as a prime broker allow the client to trade wherever they want, and on a post-trade basis, give up the positions to Hidden Road where they net and settle. And so very quickly, wherever they want is bucket one is the crypto exchanges and spot perpetual swaps, futures and options. Bucket two is the OTC market, where they face market makers bilaterally from trading, but they give up the position to the prime broker where it nets and settles. Bucket three for us is we're the only PB in the world that'll cross margin and margin finance native crypto against regulated futures and options, for example, CME. And finally, the fourth bucket is clients can trade on non-custodial ECNs where we provide credit, including the likes of Rule Match that are coming online and winning material market share. And so as a PB, we provide clients credit, margin financing to trade across all of these. We take away the counterparty risk. They face and settle with us. It's a well-known, well-capitalized entity. What we're not doing is we're calling ourselves a PB and then giving clients a platform that routes all their trades. And in some instances, these so-called PBs are actually running trading desks. This is a very different business and one that presents very different risks and concerns that clients need to carefully evaluate. Many of these firms we hear calling them PBs are unregulated and thinly capitalized. So that's a little bit of perhaps why there's the haziness, the gaps, right? For institutional clients, they either cannot trade on all of the current infrastructure, and if they can only do that in small doses because of the risks involved. And so the gap that we're filling is very large. In short, giving them a highly regulated PB platform to access the entire landscape in really a safe and capital and cost efficient way is the goal. What does it look like kind of, the before and after? I think it's important, Ian, to remember the initial lenders in the space all basically blew up. In fact, when we look back in years, I think the issues from crypto early on, I think we're going to point to the irresponsible lending and those providers that were in the space. The idea that they could take capital from retail, promise yield, then have it sit on their balance sheet burning a hole in their pocket was not a good one. And so as a result, they wildly lent this out to trading firms with little to no track record, unregulated, and didn't even have audited financials. To me, in the traditional world, that's crazy. So the way Hidden Road as a true PB offers those services is through margin financing, right? This is very different than lending clients outright collateral. We can lend in size into accounts that we control and monitor from a risk perspective. And ultimately that allows the institutions to scale their business. And this is what will change the dynamics in the market, is that part of that infrastructure. Okay? But look, as a PB, we do a few things. First, our actuaries are experts in underwriting counterparty credit risk. Second, we manage liquidity. And by that, I mean liquidity on our balance sheet, and therefore not in the business of rehypothecating client collateral, but instead we build our own balance sheet, which is backed by some of the largest names in the world. Third, we price term liquidity. And so this is where we lend, or we provide that margin finance I was talking about earlier. We know where it is, we know under what terms we've lent it out, and when we can recall that. And finally, and probably most important, is you set appropriate limits for all counterparties that you interact with, including exchanges that you interact with, right? And so we have a very different set of limits for folks like FTX, right, than we do for the CME. But regardless, you set limits and you stay compliant within those limits. These are principle-based approach. So this is how and why clients can get comfortable with Hidden Road, as our team has built, managed, and frankly commercialized many of the PB clearing platforms in the banks over the last few decades. The current infrastructure, again, was built for retail. And so institutions and our regulators will likely require this horizontal infrastructure we've been describing, which will offer material improvements to the current settlement process and greatly improve the capital efficiencies in the space, allowing third-party capital to really enter the market, which again usually happens, vis-a-vis prime brokers. And so I think collectively we all will move this to what it, the infrastructure that institutions, creatures of habit are known for and understand and like, frankly, and as do the regulators that over many decades have pushed it there.
Wow, that was awesome. Very cool to see. I know a lot of that was probably over people's heads. Honestly, some of it was over my head, but very cool. That's the CEO of the company Ripple just acquired. That's going to be a very, very interesting partnership, this Hidden Road thing, and I think you're going to see a lot of advancement in the industry. Made a video last night about how excited I was about that acquisition. It's really a home run. See what else we got. Just scrolling through the news real quick, making sure there's nothing we're missing. Looks like we're not getting any big capitulation this morning, which is good. We'll see what happens when the market actually opens up. There is some fears about the 10-year. Treasury rates going up, so interest rates going up is problematic, but we'll see where that ends up shaking out. Let's see what else we got here. If you have anything in the comment section. Hidden Road? Yep. Nope. Hidden Road's gonna be an interesting build out there. Oh, sorry. I tried to mute up before that happened, but I muted up and then couldn't sneeze and then it just snuck out. Oh. Oh, interesting. XRP's ETF volume was double that of Solana's 2x fund. So interesting to see more demand for XRP than Solana. Let's see, what else do we got here? Surprised there's not more clips of the Trump administration on my feed right now. I want to make sure I'm not missing anything. I'm sure people saw this. Standard Charter says XRP could be $12.50. I think it could be higher, but great to see Standard Charter kind of putting out XRP price predictions. I mean, that's wild to see. Never in a million years that I would really think Standard Charter, one of the largest banking institutions, would be putting out price predictions, but we love to see that they're now taking things like XRP more seriously. I'm seeing some reports that the stock market is turning green. Let me take a look at that. Yeah, some stocks are actually turning green right now. Ripple purposely holding back. Hey, yeah, Erica, I saw the Trumps are now selling their ETH positions after buying the high, so that's kind of funny to watch the capitulation there. Welcome to crypto, right, guys? They bought the high, they now are getting crushed. Now they're selling the lows. We'll see how long the Eric and Don Trump continue to trade the cryptocurrency market. I wouldn't expect them to be selling now. You'd think they'd be buying now, but you know, it seems like they bought the high, they sold the low. Pretty rookie stuff so far. Yeah, a lot of stuff sort of turning green in the pre-market. We'll see if it's just a dead cat bounce or we're able to continue to stay green. But right now, it looks like pre-market won't be that bad. Yeah, since they got involved in ETH has just been decimated. All right. I'm not seeing anything else that notable to cover here. Bank of Canada, interesting quote here. Bank of Canada is saying, we're going to work well for a number of years and things are going to start to go wrong. You can fix it at the margin at first, but eventually you need to switch to something else. She believes blockchain could be the thing to switch to really fix the banking system. Just further confirmation that this is nothing more than a short-term shakeout. All the biggest financial institutions are now saying the technologies we own are going to be critical. Not sure what else some other people need to see, but look, this has nothing to do with the transformation that's underway. It's just a blip on the radar and part of the journey. XRP turning slightly positive right now also. Whoops. Got a little bit of a green candle coming in. We'll see how powerful this can get upwards. Obviously, we need a little bit more than this, but at least this isn't red crashing back down. So we'll see how all that plays out. Guys, with that said, I'm going to cut it off here. Guys, thank you so much for coming. You guys are all incredible. Interesting times. It seems like to me we're probably through the worst of it at this point. It's hard for me to imagine much escalation from here. Guys, thank you so much for coming. You guys are the absolute best. Hold on tight. We'll get through this.